Today's webinar grew out of the Insight Center's new strategic plan, in which one of the primary strategies is to more explicitly link our income and asset building and preservation work. And since most of our work involves collaboration with other organizations, we wanted to bring in a few of our partners to help us highlight how income and asset building and preservation work connect together. So from this, our goals for today's webinar include spotlighting examples of, as well as identifying future opportunities for, successful synergy and collaboration among income and asset building and preservation efforts in California, as well as demonstrating the importance and value of bringing a race, gender, and age lens to this work. We have a great set of experts on today's webinar, and before we begin, I'd like to introduce them briefly. First, I'd like to introduce Sandra Murillo-Rucker with Women's Initiative for Self-Employment. As a master trainer and business consultant with Women's Initiative, Sandra assists high-potential, low-income, and low-wealth women with starting or building their own businesses. Sandra is very familiar with this process as she herself is a graduate of Women's Initiative's ALAS program and a successful business owner. Sandra will share with us how, through Women's Initiative's intensive programs, low-income and low-wealth women overcome economic and social barriers to achieve self-sufficiency. Sandra, thanks so much for being here today. Next, I'd like to introduce Paul Leonard, the California Director for the Center for Responsible Lending. Paul's work in California has focused on protecting the financial well-being of Californians in the context of mortgage and payday lending. Paul will discuss the current status of the foreclosure crisis in California, specifically as it has impacted homeowners of color, how the recent foreclosure settlement might bring some relief, and what local and statewide reforms are taking place or are on the horizon to address the economic devastation resulting from payday lending. Thanks for joining us, Paul. And I'd like to introduce Cheryl Lane with EARN. As Director of Public Policy, Cheryl's policy work is dedicated to championing national, state, and local asset building policies that open the door to financial success for low-wage workers. Cheryl will share with us what EARN and its partners learned through a series of statewide listening sessions on public policies and programs that help low-wage workers and their families access wealth-building opportunities, as well as some next steps from that work, and also the work of a statewide asset building coalition called the California Asset Building Coalition. Cheryl, thanks for being here. And now I'd like to turn it over to Anand to start us off with a brief overview of the Insight Center's Closing the Racial Wealth Gap initiative, the interplay between income and assets, and the importance of applying a race, gender, and age lens to this work. Anand?
Thank you so much, Jenny. I thought I'd start by illustrating the depth of the inequities on a national level. And these are sort of the most striking numbers that came out last year. In 2009, the median white family had 20 times the net worth of the median black family and 18 times the net worth of the median Latino family in the United States. And when we focus on California, the net worth of the median white family is more than 17 times the net worth of the median family of color. And nearly 42% of all California households of color are asset poor. That's twice as many as white households in California, and it means that the family does not have the resources to survive for 3 months if their income suddenly dries up. Then they're asset poor. And this level of inequality is unsustainable, and working towards a more equitable society will benefit all of us. And the Closing the Racial Wealth Gap initiative works towards economic security for all, with a focus on removing the specific barriers to economic security faced by families of color. We have a number of national and state-level projects, including educating policymakers and the public about discriminatory policies and recent practices that have caused the increasing wealth disparities between white families and families of color, and developing policy strategies to reverse this trend. We're really happy we're doing this webinar today because we see income as a critical piece of asset building. Income is the most important building block of assets, building assets or wealth, and we're now finding that income disparity is one of 3 major drivers of the increasing racial wealth gap. So focusing on income and employment is a critical piece of closing the racial wealth gap in our view. Many of the experts in our Experts of Color network, which is a network of scholars, practitioners, and activists of color who are experts in a field related to race or wealth, many of these experts are focused on how income and employment affect racial wealth disparities. So income plays a huge role in how we see closing the racial wealth gap. And we're happy to have Cheryl Lane as a presenter today. She's a member of our network. We also produce groundbreaking research on racial wealth disparities. Several of our reports bring a gender and age lens to this analysis, including pieces that look at women in wealth, children in wealth, and Social Security reform. And you can find all of these reports on our website at insightcced.org. Finally, we think it's imperative that all income and asset building organizations develop a way to ensure that their programs do not exclude families of color or disproportionately benefit white families. And we're hopeful that this collaborative webinar leads to a conversation about achieving that goal in California. Thanks.
Great. Thanks, Anand. So to get us going, we wanted to have a conversation first with Sandra Murillo-Brucker with the Women's Initiative for Self-Employment. So Sandra, it seems to be becoming increasingly clear that income and asset building strategies cannot be one size fits all, but really need to be culturally sensitive and tailored based on the economic disparities and barriers that exist for specific communities, such as communities of color, women, and older adults. Women's Initiative has found that microenterprise is highly successful at both increasing household income as well as wealth, particularly for women of color. Women's Initiative clients who started a business demonstrate a 99% increase in average personal income and a 274% increase in average net worth 1 year after training. What do you think makes self-employment a successful income and asset building strategy for low-income and low-asset women?
First of all, it's very important to mention that the success for that is that we have and we build our mission in the entrepreneur capacity for these low-income women to overcome really the social and economic barriers that they can achieve the self-sufficiency. We are a non-profit organization founded in 1988 and serve over 22,000 women and servicing the San Francisco Bay Area with 5 offices, 18 satellite locations, and now expanding to Chicago and New York. And in the next slide, we're going to find how is the part that we is very successful for these women, because the first thing we do is to train, we fund, and we support. The way we do it is we do a My Business Action Plan with these women. They participate in Entrepreneur Readings Workshop. And as you can tell, in that part is the part that we have in the intake. After 1 year that they had our training with us, we had part of the training program is the Simple Step. That is 11-week small business training course with a group of 18 women. We don't allow more than that, so they can meet twice a week, so we can have one-on-one individual education for them. In these successful classes, they learn about the basics of running their own business, setting the price, doing the break-even point, do the marketing, bookkeeping, etc. The course also addresses the challenges and barriers to success these low-income women face every day. As you notice is, first they start with the idea, and later they move to the startup. After the startup, the increment on the monthly income with existing business is really high, and it's continue the same as established as a business. If we look at the next slide, what we're going to have is these students, they are like having the requirement to have really a business plan, and they need to write it with really electronic plans that they need to have as a roadmap for the start and growing the business. And I want to mention the 98% of the program participants are really low or extremely really low income. 75% of the program participants are really women and color, 38% is Latina, 26% is African American, and 20% are single parents. So what makes it successful about that one is like that they have specific barriers, what they have and they compare. As you notice in that slide, we have the students, especially with the low-income Latinas, they are more likely to experience really high rates of inactivity in business compared with other members of the population in the United States. And we're going to talk later about what is all these barriers that we had that one. The specific barriers that we had that, especially in the women color, trying to start their own micro-enterprise, are how they overcome them. They had the language barriers, the low education, the lack of knowledge of technology, the isolation from family and friends, lack of startup capital, no income or working for low income wage, the domestic violence, the disability, low self-esteem, no credit, savings, and checking accounts, and of course, we had no access to capital assistance and no business training.
So Sandra, just to recap again, that previous slide that you were referring to, those are a list of specific barriers that you and Women's Initiative has seen that are facing women of color who are trying to start their own microenterprise. Is that correct?
Yes.
Okay. And can you tell us how Women's Initiative, through its training programs, are able to assist these women in overcoming these particular barriers?
We have these barriers. We already know they come with that one, and that's why we develop a very good partnership for us to do that one. We cannot do it ourselves. We had a very good partners that they can help us with barriers with the education. We partnered with adult education centers, and also we partnered like with the EARN for IDA and saving accounts that they have. We also had partnered with another agencies that is domestic violence program that we have. Shelters that is like, for example, in San Francisco is the Casa de la Madre in that part. With access to technology, we have all very good partners that is Caminos with technology. Startup to capital, we are very good with banks that they help you, and included with the EARN as well, help them to get access to this capital for these students. Also, we have the children's council for them for the services with the daycare, and also with the La Cocina, giving the non-commercial access for them to start the business. And it's important to make sure when we already know we have these barriers, we develop a curriculum based on these barriers. We have both curriculum in English and program, and also we have the technology integrated into our classes. We have as a family and friend during the classes, and when they finish the classes, we continue to give the support, and they continue to be with us as a part of the family.
That's great. So it really sounds like what you've done is, in addition to identifying the problems, you've then reached out and found partners in the community who can help work with you and the Women's Initiative curriculum to address each of these barriers. And then on top of that, you're committed to a long-term relationship and mentorship and support system for these women who are going through your training program. So they don't just come in necessarily for the 11 sessions or whatever it might be, but that they know that they can come back for continuing support and probably even to access the peer network of fellow entrepreneurs who have gone through this program either with them or in previous classes. So that's great. I also understand, sort of staying with this particular issue of barriers, that Women's Initiative clients have also changed in recent years. Can you describe what's changed, why these changes have occurred, and how Women's Initiative is meeting the needs of the changing clientele?
Exactly. We have industry changes, and I think that happened like every 10 years for the agency. Now we have the generations with the baby boomers approaching. The majority of their students, they are in the age with the 39-year-old compared with the previous group. We had more Latina population in our classes compared than before. We used to have just one office in San Francisco having the demand, and now we, as you can see, if we open even satellite another office, because we are having the big demand for the Latina population. We had also the changes that we had is we had more rules for business and more taxes for this business. We noticed also the implement in the year 2000 about the workers' comp insurance for having all the employees, and that impact really our clients and our business that we have for our organizations. What we have is like even we having a big demand out of the population with the Mexican community is now start changing, having more like different kind of the Latinos. We're having more now demand with El Salvador, with Peru, and Colombia, and even with Argentina. And also the impact with the immigration, and also the impact with all the security that they have for import-export business that we have after the event for 911 that we had. They really impact the kind of business that our students even open to our organizations. And as move also the impact that we had with the technology is before we don't have that one, and the kind of business now is totally different based on that changes that we face in that.
So you guys have really had to make the shift as things are happening, you know, in our world, and as the changing demographic of your clientele, both in terms of age, and it sounds like from country of origin is changing. You really had to be adaptable in your programs so that you can meet the need and sort of the changing need of your clientele, it sounds like.
Exactly. And it's important to mention about that it's all these changes affect even the kind of business they open, and our curriculum, and even our trainers. We used to, we need to have the demand of the trainers with the business experience, with business, with technology, and also high technology skills for how to teach marketing.
Mm-hmm. Mm-hmm. And do you have a particular client example that you could share with all of us?
Of course. Let me, in the next presentation, I have our next student. But if you can see with her, it's a very successful, and it was one of the part of the students that she started her business from home. She really started with the Crayon Box Preschool. It was not like that. It was a daycare with 2 students. She started the business in her home with her mom, having only 2 students for 3 months, and now she's very successful with the Crayon Box Preschool, having 3 locations. In one location in San Francisco, she's having 150 students. She's having 6 classrooms. And in the second location, she has 85 students. And on the third location, she's having 150 students. So she owns her home, and she able to even buy the building that she's having the preschool. As you can see, Adriana is one of the success stories for us, the way she started the business. And of course, it was with a great effort with all our support that we had with all the partnership. And I can talk with the next slide, the next student also, that it was very successful. And what I love to local is Veronica. Veronica, she's very successful, and is also partners with our organization La Cocina, that it was helping our students as well. And also we Opportunity Fund help us with a loan for these students to start the business. And this business starts in Marine. And Right now she's having 40 employees in her business. She started her restaurant and food business at home. Started just with her husband, her mom, and her daughter doing that one, informal business. After she started moving and working very hard in the flea market, now she has a very successful business, and she's planning to even try to open another business for the next year in San Francisco. So if we go to the next slide, we have these other students that also is very good to have the partnership with these students. That's Jaquecita's Nail Studio, that they had domestic violence. They was living in a shelter. They was, after living in a shelter and having this domestic violence, they're having a successful business now with the collaboration of so many organizations that they helped them as a partnership, but it was Meta, and also it was a very good partnership that they give Kiva with $5,000 so they can start the business. So this is very good when you have the partners, and it's really, for them, it's a big commitment for also return to the agency what we do for them. And if we go into more detail with these students, we have the next one that is Mex Events. She is the first Latina in business when it was in San Francisco on the Mission area or on the Mission district. She having a beautiful store in the Valencia now business, a very beautiful folklore store that they have. With her and with expansion, she has right now 50 employees. Also, she gives back to the community and also to even in Chiapas, that is where she's from.
Excellent, great. Thank you so much, Sandra, for that overview. And it's really great to see how dramatic the growth in both income and assets as a result of microenterprise, what that results in, and also to hear that the work is expanding beyond the Bay Area into the Chicago and New York area. So thank you so much for sharing that with us today. So I wanted to turn it over to Paul here, and taking a step out to look at the state as a whole, one of the most, if not the most troubling threat to asset preservation for Californians is the foreclosure crisis. And according to CRL's April California foreclosure statistics, looks like more than 500 California families have been losing their homes every day since the fourth quarter of 2007. And I imagine the magnitude of foreclosures is greater in California than in other places across the country. Why is that?
Well, first of all, thank you for inviting me to participate in this webinar, and I'm really happy to be here. If we go to the next slide, first of all, I wanted to be clear. Oh, we may even have to go to the next slide after that. There we go. That while the numbers are still high and daunting, as you indicated, 500, an average of 500 per day since 2007, we seem to have been, we are past the worst of the crisis here in California, but remain at historically record levels of delinquencies and foreclosures, as this slide that you're looking at shows. The reason that there are a number of reasons why California was particularly hard hit. Most importantly, California experienced a run-up in prices that was greater than in other places, many other places. The so-called sand states of Florida, Nevada, Arizona, and California are the four places that have really borne the greatest brunt of the foreclosure crisis. Now, why is that? I think it's a combination of a number of factors. One is that there was an overbuilding, particularly in exurban areas outside of major metropolitan areas. So in the Inland Empire outside of LA, where folks who couldn't afford to buy homes in major metropolitan areas moved to buy homes in further out outlying exurbs that they could afford. And as a result, you saw sort of a major boom in building in those communities and communities that were sort of bedroom communities of the Bay Area in the Central Valley communities. And you saw just a huge build-up in Central Valley and Inland Empire in particular. Second, you had the concentration of subprime lenders that are headquartered here primarily in Southern California that were really on the market and saw California as a growth market opportunity. Once housing prices started to take off, there became a sort of a self-fulfilling cycle where both lenders and borrowers felt like there was both money to be made, and if they didn't get into home ownership now, they would be falling further and further behind. So California ended up being one of the real epicenters of the foreclosure crisis nationwide.
And so when you take a closer look at mortgages that originated between 2004 and 2008, it looks like Latino and African American homeowners across the state were approximately twice as likely to face foreclosures than non-Hispanic white homeowners. Why do you think foreclosures have disproportionately impacted Latino and African American homeowners? And are there policies in California that specifically help communities of color rebuild those assets?
Well, you can see the slide that's up now. You can really get a good look at what the numbers are and see how clearly this crisis has fallen disproportionately on families of color, particularly African American and Latino families. The red boxes on this slide indicate completed foreclosures as of loans originated between 2004 and 2008 as of February of 2011. And the blue boxes are the folks who are at 60 days delinquent or in the foreclosure process. And you see that both African American Latinos are considerably higher concentrations of those households are likely to have either experienced completed foreclosures or who are at risk of foreclosures going forward. Next slide, please. One of the things that's really striking about the foreclosure crisis in California is that it is not restricted to low and moderate income families. And in fact, the disparities in foreclosure rates are greatest at the middle and upper income levels, particularly for Latino households here in California. The source of this problem, next slide please, is that literally minority families were targeted for the riskiest loans, loans that had higher rate loans, subprime loans. The hybrid ARM is the standard subprime loan of the boom in the market, and prepayment penalties. All of these are features of standard subprime loans that are also correlated with high levels of foreclosures. And I should point out that this graph shows that this is not a percentage point difference on the left side here. This is a multiple difference in comparing minority likelihood of receiving these risky features to non-Hispanic white households. So, for example, African American and Latino households were more than 3 times as likely as white households to receive high-rate loans. Part of this also goes to the geography and concentration of subprime lending in low-income communities, in urban areas, as well as if you look in the Central Valley and the Inland Empire, you see that subprime lenders, and particularly mortgage brokers, were the source of most of the originations of loans that are targeted toward, that are received by minority households. So minority households were much more likely to get their loan through a mortgage broker who had financial incentives to put them into higher cost and riskier loans for those borrowers. And in those communities, you also see a lower sort of penetration of the sort of traditional big bank lenders who seem to have really ceded the mortgage market to brokers and subprime lenders in large parts of those geographies.
And have you found that
in terms of,
go ahead.
Go on. Well,
No,
in terms of policy solutions, I think it is critically important that while I don't think that there are specific policy solutions that are targeted at minority communities per se, but I think that the major policy reforms that have happened and the ones that are on the table, because minorities are more likely to suffer from foreclosure, any improvements in the foreclosure process, in loan modification processes, are likely to have disproportionate benefits in helping minority borrowers and minority communities. Toward that end, we are working very hard right now on legislation that has been introduced and supported by Attorney General Kamala Harris, and there is a big push on in Sacramento right now to conclude a major set of negotiations around a legislative proposal that would extend some of the key provisions of the national mortgage settlement that was signed by only the 5 big national banks, that would extend those servicing reforms to all of the servicers here in California, so that all borrowers, regardless of who owns your mortgage or who is servicing your mortgage, would have to play by the same set of rules, ensure that borrowers get a better, fairer shot at getting a loan modification, have an answer on their loan modification application before the foreclosure process starts, get better information about the servicer's evidence and documentation around foreclosures, enjoy a single point of contact from their servicer, because we know all too often borrowers are calling servicers repeatedly, having to repeat their story to every new person who they talk to. And so the settlement, the AG settlement, as well as the Homeowner Bill of Rights, would require that servicers establish a more streamlined single point of contact to provide timely and consistent source of information for where their loan modification application stands. And perhaps most importantly, a strong enforcement mechanism. This has been one of the hallmarks of the foreclosure crisis to date, has been a series of well-meaning, well-designed programs, but that were essentially voluntary programs, and where the servicers have simply not had the capacity and the will to live up to the rules of these programs. The programs, the HAMP program, the GSE servicing reforms, have not had sufficient enforcement mechanism to ensure that servicers are consistently and uniformly applying and living by the rules of the programs. So the strong enforcement mechanism, including here in California, the right for borrowers to actually sue their servicers if they are not following the law with respect to providing timely and fair consideration for loan modifications, is a huge step forward if it happens. This bill will be considered in the next week or so, we expect, in Sacramento. We expect there to be a very, very strong opposition from the banks and financial services industry. And so we're working hard to make sure that this becomes the law of the land here in California.
That's great. And are there steps that folks who are participating on today's webinar could take to help push this through, especially since it's coming up in the next week or so?
Absolutely. That we're in a little bit of a standstill right now in terms of being able to see the final language and the details of the bill. That's being negotiated in what is called a legislative conference committee. The final language hasn't yet come out of that committee. But what I would say to the folks who are on the webinar here in California is keep a close eye out on the news. We think it will be big news when, in fact, the bill gets approved by the conference committee. And then once that happens, I think it's critically important for folks to call, email, and weigh in with their state assembly members and state senators, urging them to support this strong Homeowner Bill of Rights, which, again, is likely to come up either next week or potentially the week after.
Great. And what we'll do after the webinar is we'll provide information to all the attendees as to, how they can sort of plug in and send, letters and make those calls. So we'll make sure to give everybody that information after the webinar. So
that would be great. Thank you very much.
Sure. And it seems like the foreclosure crisis also raises the broader problem of appropriate and affordable financial services and products. And a growing problem that we've seen in the state has been the rise in payday lending, which offers quick access to cash, but with outrageous triple-digit annual interest rates. As many of us know, debt incurred through payday loans can quickly spiral into a cycle of debt that takes income away from meeting basic needs such as food, childcare, and utilities. So Paul, what do we know about those who are taking out these payday loans and what's driving the need for these loans? Is it the recession or is there something else going on here?
Well, a couple of things. One is typical income is around $40,000. You have to have a bank account and a checking account specifically in order to get a payday loan, at least from a storefront payday lender. The borrowers, payday borrowers, are heavily targeted and, not surprisingly, disproportionately are a minority. They represent 56% of all African Americans, Latinos, and Native Americans represent 56% of all payday borrowers, even though they only make up about 35% of the adult population. And we have calculated in one of the reports that we've done that payday lending annually drains about a $250 million out of California's communities of color. So this is a very damaging product, as you indicated, and the slide on the screen shows. The problem with payday loans is that borrowers don't have enough income, and we have found consistently that despite the advertising for payday loans that are designed and marketed as being a short-term emergency crisis credit product, the reality is that the fundamental design of payday loans serves to trap borrowers in long-term 460% annual percentage rate debt that they can't afford and really have no real ability to repay. The slide on the screen shows that while the FDIC, in doing some regulations a number of years ago, basically provided guidelines to banks to saying that we understand people will have short-term emergencies, but they shouldn't be in this kind of debt more than 90 days in a one-year period. Our analysis showed that borrowers are in fact in payday debt for 212 days, or more than half of the year is the standard time in which borrowers are in the cycle of debt of payday lending. So it is a noxious product, and what's clear from the data is that for folks, it's easy to get into. People have a sense of entitlement and a desire to get short-term emergency cash, and they feel like, and they're vulnerable, they need cash. But the data clearly indicates that payday loans are most commonly used to meet regular bills, that there's a mismatch between income and expenditures, and that those kinds of problems are really exacerbated by long-term payday debt rather than solved by that kind of debt.
And it looks like several states have actually enacted meaningful reforms. Is California working on anything currently, either at the local or statewide level? And what do you think are the most promising efforts that are taking place now, and what do we still need to do?
Well, here in California, ironically, in the California State Legislature, our fight has much more been about preventing payday from getting worse than in reining in payday lending, which has happened successfully in a number of states around the country. Right now, there is legislation that has been sitting in the Senate Judiciary Committee that it would expand payday lending in California, increase the maximum loan amount from $300 to $500, which we believe would create a greater likelihood of a deeper and more noxious debt trap than is already in place under current law. We're doing a lot of work in trying to educate folks about that and make sure that that bill doesn't get out of the Senate Judiciary Committee where it's been bottled up. One of the things that we're doing is reaching out to local city councils and county boards of supervisors to pass resolutions opposing this. And some of the best efforts that have happened around payday lending organizing have been in the Silicon Valley area, where the Silicon Valley Community Foundation has funded some great grassroots education and organizing. They just passed an ordinance in San Jose with a large coalition of community groups, the California Reinvestment Coalition. So there's a lot of local activity that's happening. We're trying to get resolutions passed against SB 1158 in cities around the state, so that's something concrete. Other states have really done a number of different things. There have been legislatures where we've been able to get reforms to be put in place. In Oregon, for example, a 36% interest rate limit was established in Oregon. In Washington State, there was a limit on the number of loans an individual borrower could take out in a given year that was set at 8 loans per year. So if it's an emergency loan product, you can take out no more than 8 loans per year. Just limiting it to 8 loans per year, which we think is too many, actually has reduced the amount of payday lending in Washington State by 2/3 in just the first year in which that change was implemented. More importantly, in states like Ohio, Montana, and Arizona, as you see on the map in front of you, those are states that have taken payday lending to the ballot. And what we have seen in those states is that the voters really understand the fundamental flaws of payday lending, and they don't feel like it is an appropriate product to be circulating in our societies. And so they have overwhelmingly, even in the face of tremendously well-resourced opposition, gone to the ballot and established 36% rate caps in each of those states. That's something we're thinking about and taking a hard look at here in California as well.
That's great. Well, it's good to see that despite the devastating toll that payday lending can take, that there are steps taking place both at the local and potentially at the state level as well to curb this practice. And we have models to follow in other states, so that's really great to see. Thanks so much, Paul, for sharing that update on the statewide status of both the foreclosure crisis and payday lending. And so I wanted to turn it over to Cheryl over at EARN. And over the last couple of years, in 2010 and 2011, EARN, in partnership with the Green Lining Institute, Families in Schools, the Long Beach Interfaith Community Organization, and PICO Federation in the Central Valley, held listening sessions in over 22 communities across California. And the purpose of these listening sessions was to elicit ideas for fair public policies and programs that help low-wage workers and their families access wealth-building opportunities, as well as build a statewide grassroots constituency that advocates for such policies and programs. So Cheryl, from these listening sessions, what did you and your partners learn about what assets and wealth mean to these communities?
Sure. Thank you for having me. So from the nearly 1,000 participants across California who participated in the listening sessions, we learned that assets, wealth, and overall financial stability mean that low-income families and low-wage workers in California can have the opportunity to make their dreams a reality. So a quote that I'd like to share that came from a listening session participant that really illustrates the feelings shared often were that we don't dream for ourselves, we dream for our children. So we asked constituents to share with us their dreams and goals for themselves and their families. We didn't state that these dreams had to be directly tied to assets or wealth. And so their dreams could have been anything that was important to them. What we heard overwhelmingly is that the goals that people have for themselves and their families are the things that are fundamental to moving ahead. Almost all participants share that having access to higher education or being able to send their children to college is essential to moving up and ahead. And so they saw higher education as a component of asset building. And then as Paul just illustrated, Californians, especially communities of color, have experienced a large loss of wealth due to the foreclosure crisis. However, many listening session participants continue to view home ownership as an essential component of building wealth. So while many folks may have experienced home foreclosure or know of folks who have, many of the listening session participants want to become homeowners. So as a range of themes that we've heard, this is one of the themes heard most often among all of the listening sessions. And then finally, listening session participants expressed a strong desire to save for emergencies and higher education, pay off debt, and access credit that will help them start businesses. And so access to quality financial products and services for these communities means that they will have the opportunity to become financially stable.
So based on what you heard from these participants, how did you find that these responses affected how you and your partners think about how people look at assets and what people need to be economically secure? Did it change how you all went into this process in terms of how you thought about it? Did you learn of a different way in which the participants are thinking about assets and what it means to be economically secure?
Sure. So I think what the listening sessions provided for us is just more insight. I mean, we went into the listening sessions wanting to root a policy agenda that really met the needs of those on the ground. And so not to assume the experience that people that are occurring in people's lives, but to hear it directly from them. So we learned that people, for the most part, still believe that savings and assets can provide opportunities to become economically secure. However, people are skeptical of and disheartened by services, programs, and products from the private and public sectors that they feel do not work or meet those their needs. And so folks shared, a myriad of reasons why they feel that programs or products are not meeting their needs. We also learned that people look at assets broadly and from a large spectrum of things that they feel will help them get ahead, including access to quality health care and improving education at all levels. So these are things that may not typically be identified or prioritized in the traditional asset building framework, but folks on the ground really believe that these are components of asset building. And then finally, people see employment and quality employment opportunities as vital to getting ahead, and which should be no surprise to any of us. And so a conversation about assets and economic security was not going to happen during the listening sessions without talking about the difficulties of finding a quality job. Lack of employment opportunities was the issue most often shared among all of the listening sessions.
That makes a lot of sense. So it sounds like even though, asset building and wealth building was sort of the entree point for this conversation, I mean, the foundation needs to be set where there's enough income in order to have a conversation about assets. So that's helpful to know. I mean, the reason why I asked about whether the responses affected how you and your partners look at assets and what they mean to be economically secure is through our work around building support for the self-sufficiency standard, which is a county and family-specific measure of what it takes income-wise to meet all of your basic needs. There's been pushback about this issue of self-sufficiency and this idea of, income and wealth building being a very individualistic type of a practice, whereas for many cultures, particularly within communities of color, when you have a conversation about wealth building or income building, it happens within a community. It's, the goal is not necessarily to be individually self-sufficient, but the idea is that there's a community type of self-sufficiency that can be built up and a community wealth, which also translates to issues of wealth being not just things, I guess, in a way that you hold on to or that you have, but it could be community assets, for example, in terms of quality of life in the particular area in which you're living. So that's why I sort of brought that up, because I wondered if you encountered sort of similar reactions to this idea of wealth building as being kind of individualistic almost versus a more community type of a practice.
Yeah, I will share that I think it was dependent on which communities we were talking to, but I will say something that was very enlightening to me personally during the listening sessions were that people really and honestly wanted not to build wealth just for themselves, but they really did look at their communities. And so when we posed the questions about dreams and aspirations, people did talk about the issue of what it meant to their community, and specific communities even started talking about ideas for community ownership. So looking at assets, not just individual assets, but community assets, and how to build that and move that forward. And so in Long Beach, I participated in a listening session primarily with a Latino Hispanic congregation, church congregation. And as the conversation evolved, it went from individual assets and what my family or I need to really succeed or move forward, and then move towards what can we as a community and specifically as a church do to build economic security, stability for our community. So it is interesting to hear that among constituents that is front and center on their mind.
Mm-hmm. And so in terms of moving forward, so I know that the listening sessions have since been completed, And so how are the responses from the participants shaping how the work is moving forward, and what are sort of the next steps that are taking place?
Sure. So it is important to EARN and our listening session partners that we cultivate a grassroots leadership base made up of the thousands of low-income Californians who can really be the voice for why there's a need for policies, practices, and programs that help low-wage workers achieve financial security. And so what I often say is that, I mean, there are a myriad of experts here in California and across the country who can talk and share why all of these things are important. I think Paul and Sandra both illustrated that, but we really need to hear from those who are directly impacted by the things that we advocate for day to day. And so that's really our mission in this work, to really lift up those grassroots constituent and community voices. So as we move forward, we plan to collectively develop a policy agenda that is informed and rooted in the experiences and what we heard in the listening sessions across the state. And so as a result of that, of their work so far, we have identified 2 policy areas that really meet the needs of what we heard in the listening sessions, as well as strategically align with our partnership organization. So we're going to focus on 2 areas. 1, improving opportunities for low-wage workers to access high-quality financial services and products, and 2, improving access to higher education. So this year we plan to develop a more focused policy agenda based on those 2 issue areas. We will also continue to engage constituents through various advocacy activities. So the first phase of our work was the listening session, but that is not the end of our work and engagement with constituents around the state. So we will continue to engage them, and it's great that we have partners who are community organizers and community organizing organizations who can help lead that effort. We are also exploring how we can connect constituents to services and products in their communities, since constituents express an immediate need for resources that provide financial education, max savings, and access to funds for emergencies that are not predatory. So what we learned is, when we went to these communities, is that they have an immediate need now for good services and products. And as Paul shared about predatory lending, folks are really looking for alternatives. So they need something that's an alternative in their communities where they can access emergency funds. And so we're hoping that we can continue to engage those constituents and connect them to good quality services in their communities.
That's great. And so switching gears a little bit, there's a broader statewide movement to encourage asset building taking place throughout California, and it's happening through the California Asset Building Coalition. And this coalition was formed to raise public awareness, build organizational capacity, and improve public policy for asset development across California. How is the coalition addressing the diverse needs within the various communities within our state, and how does income building and preservation intersect with this work?
Sure, and so I don't want to confuse everyone, so I'm kind of changing and shifting hats right now. So the work I just described is EARN and our listening session partners really leading a grassroots constituency building effort. EARN is also on the steering committee of another coalition called the California Asset Building Coalition, or the CABC. And how we're working as of now, for the past 3 years, we have hosted the California Asset Building Coalition, a symposium which brings policy advocates, practitioners around the state of California to talk about issues connecting assets as well as income. And so it initially evolved out of building more awareness for the earned income tax credit. And so as it has moved forward, we have lifted up other ideas, both rural as well as urban policy and practice in these various symposiums. And so the intersection of income and assets is embedded in the work of the policy and practice organizations on the steering committee, and then many of those who participate in the annual symposium. This year, the CABC plans to formally invite stakeholders to join the California Asset Building Coalition as a member, and so more information will be released about that. So as the California Asset Building Coalition moves forward, we really see the work really continuing to lift up ideas around the state that intersect income as well as assets through the symposiums, as well as to bring more light to policy and practices that we feel as a state we would like to move forward.
Great. And you mentioned that the coalition is looking to open up its membership. Is that something that's available now to folks who have plugged into the webinar, or is that something that's kind of coming down the line?
It's coming down the line, and so more information will be sent out about that. And then if people want specific information, I think just to make it easier, they can send me an email, and I can send them a link to the website that provides information about the California Asset Building Coalition. And then I want to plug 2 events before I let go or we conclude this part of the presentation. So there's 2 events happening related to the California Asset Building Coalition. On October 4th, the California Asset Building Coalition will hold its 3rd annual symposium, and this year will be held in Fresno, California. We did that as a way to really address the needs of those in the Central Valley, which are often overlooked. This will be an all-day conference that will allow practitioners and policymakers to engage in peer learning and increase the understanding of various topics related to income and asset building. And so more information will be shared about that. And then lastly, I just want to share for folks who are on the call, EARN is hosting an event on July 19th in Los Angeles with our listening session partners. And at this event, we will go in depth about our listening session findings. And we will also be joined by the UCLA Asian American Studies Center and the National Council of La Raza. So for those who are interested, it's a great opportunity to learn more about our grassroots constituency building work and the findings from our listening sessions. And more information can be found on EARN's website soon, or you can send me an email at my email address, my name, Cheryl, with an S, @earn.org.
Perfect. Thanks, Cheryl. And just for everybody to know, at the end of the PowerPoint presentation, which we will be sharing with all of you after the webinar today, you will have a complete list of all the contact information for all of the speakers today. And we will also follow up with any additional information that's been provided, such as the, if there's a link for the symposium that's taking place on October 4th that's held by the Asset Building Coalition, as well as EARN's upcoming July 19th session in Los Angeles to go over the results of those listening sessions. So thanks so much, Cheryl. Really appreciate that. All right. So opening it up a little bit more to all the speakers and circling back to our goals that we mentioned earlier in the webinar. So although we found that barriers to building and preserving income and assets, particularly for women, older adults, and communities of color, are challenging to overcome, you all have really identified for us some successful or promising programs and policies that address these barriers head-on. So on the next slide, I actually have a couple of questions that I just wanted to throw out to all of you. The first thing, which in reflecting on the first 2 goals for today, which includes spotlighting examples of, as well as identifying future opportunities for successful synergies and collaborations among income and asset building and preservation efforts in California. Can you share an example or 2, possibly, of successful alliances that you've been a part of that you really thought brought out income and asset building and or preservation efforts together, and what you think made it successful? And I know that a couple of you have touched on this already, but just wanted to really sort of hone in on this. So I'll just throw it out to all 3 of our speakers. Yes.
I'm Sandra. For us, it was very successful when we partnered with the EARN Opportunity Fund and the Mission Asset Fund. That was a very important asset building partners for us and our clients. Another important partners, of course, it was the bank that we had a successful partnership with the Circle Bank in Marine, and are in the process of establishing a partnership with another Bay Area bank. Also, the micro-entrepreneurs who receive business training and support in combination with this financial service really have the highest success rate. As I mentioned, with the EARN or the Opportunity Hope and the Mission Asset Fund, having the savings accounts, having them that they need to provide business plans to have these savings, and also having them that they can have this money to continue education. We had more consultation with this student or client, and we noticed it was really having the success rate even on the business or to continue education.
That's really helpful. Thanks, Sandra. And what do you think made that particular partnership that you mentioned successful?
It's successful because they understand our needs. They already understand our clients. They have people who even speak the language as well. It's like we don't need to really explain how our clients are different compared with the other organization or maybe other banks that they don't understand our clients. They don't even have a credit card. They don't even know a saving account. They don't even have checking accounts. They don't understand the language. So they understand our needs that we have, and it's easy for us to have that communication with the student, with the bank, or with the other organization as well. So we can achieve the goal with the students to have the success for that part.
And did you find that you were mentioning your partners understood the needs of your clients and also had language capacity? Was that something that they came to the table with, or was that as a result of having an initial meeting with Women's Initiative staff for you to convey, these are the needs of our particular clientele, and then as a result of that, they then ramped up their language capacity and were able to better tailor, their work or their product, whatever it might be, to the needs of your clients? Did it happen that way, or did they already come to the table with those capacities in place?
We had a previous meeting also that we need to inform to them, because we had other organizations, maybe other partners, they feel frustration with that frustration, how really our students work. And so we really need to communicate in advance about our students and what we're looking for. But also, many of them, they already had that one, so they came with the table with that service. So that's why we contact them, because we noticed they had that. So, but they need to also, the communication to understand that one, that is even the immigration as well, and also the language barrier, and all the things that I mentioned to you with the no access to capital, no equity, no even real estate property to have as a collateral, even having their own car. It will be a biggest impact when they don't understand our clients. We already understand that, but we need to explain to them, so they don't have that function to have another expectation for our business plans. Because our business plans, they are not compared with someone with a high level education and a high level or expertise in business.
Okay, that's helpful. Cheryl or Paul, did you guys want to add anything to this particular conversation about examples of successful alliances that you've been a part of? And Ern was just mentioned actually in the alliance with Women's Initiative, but just wanted to give you an opportunity to pipe in with any other examples that you wanted to share from your work.
This is Paul. I have just one example and one sort of further connection that I think is important. The example is that as part of this larger coalition working in the San Jose area around to get the city council to pass a local ordinance around payday lending, the coalition undertook a community education effort that brought folks who were knowledgeable about payday lending to talk to and interact with social service providers that are working with lots of folks who are trying to make connections to employment and to work, and to really educate them about the risks of payday lending. And I think that's sort of an interesting area of opportunity, it seems to me, because you have kind of the social service agencies and welfare service providers who are at a point where are trying to connect people to work and to jobs, but that the idea of budgeting and financial management and financial products and services is not sort of a core part of their kind of world and foundation of knowledge. So I think that was a sort of an interesting experience, if not a full-blown partnership and project, but one that it seems like it's worth thinking further about how we kind of build those bridges with sort of the traditional infrastructure of social service providers. I mean, the other really big sort of sort of piece of work that we have not really touched on directly here is how all of our efforts connect to the people who are trying to connect and advance people in jobs, and how we interact in that world, not through self-employment, but helping to prepare and connect people to well-paying jobs, or once they get jobs, moving them up the job ladder to get a job, a good job, a career, all that stuff. How we kind of connect the kind of asset building world to the workforce development world in a more structured and consistent way.
Right, and that's a really key thing to bring up, Paul, especially because, as Cheryl mentioned in the results of the listening sessions, the participants who came to the table said, before we can even have a conversation about asset building, we need to have access to good jobs so that we have the income to cover the basics first, and then we can, have a conversation about wealth building. And so there's definitely some additional connections that we can be making to not just sort of job enhancement through self-employment, but also job training as well. So I appreciate you offering that up. And so actually, in that vein, since you're bringing up opportunities, I wanted to open up the floor also for sort of the second part of the question, which is, we've talked a little bit already about some successful alliances that you've already been a part of, but are there other opportunities that you see for income and asset building and preservation efforts to align and work together? We've talked about, intersecting job training and the workforce development system to the asset and wealth building and preservation movement. So what are some other opportunities that you might see, and what do you think why do you think this type of partnership is important?
I will say,
go ahead. Is that Cheryl?
Yeah. I'll speak on that from just our grassroots constituency building work. And as we move forward, we really are trying to build a movement in California of constituents who really are at the forefront of the things that we're talking about and discussing today in terms of income and assets. And so we're really building that constituency. We really need to look at their self-interest, and their self-interest are these issues. And so in doing that, we really need to look at this issue of how do we build a community of folks, whether they're organizations who may not be the typical asset building organizations, but at the end of the day, all of us are trying to advocate our work on behalf of low-income people and low-income families and low-wage workers. And so what does that mean? So for us, it means who are the folks that we typically don't work with, who we know we need to work with to really build a movement in California. And so it may mean aligning with folks who just work on quality job issues or job rights or worker issues, or those who are focused on services and welfare and those services to uplift folks who are really struggling and can barely get by. Because we know at the end of the day, our constituency are all of those people, those who are working poor and working families, and then those who are really struggling and depend just to get by on social services and supportive benefits. And so for us, as we build a movement, we see that integral to align ourselves with those efforts.
Great, thanks. And Sandra, was that you? Did you have a thought on the opportunities?
Sure. I want to add also, really advocate for the education, especially English processing. We have in California a lot of cutting in funding for adult education. As you know as well, there are a lot of English classes that are cutting for that, and it's an important part to advocate for that. And also, the education for the business and financial education is not accessible. And also the computer skills. There are some barriers to both on income and asset building for them to achieving the individual and community benefits of established formalized business for many of micro entrepreneurs. Like the IDS, for example, they are no longer available in every country in the Bay Area. Or like the first-time leaseholder grants, they are no longer also available to help start move us into the commercial space. So it's important to really try to fight and work for that one, because it's we're finding more cats right now.
Mm-hmm. No, that's so true. That is so true. So
can I just
yeah.
jump in really
Oh, yes,
quickly?
please, Paul. Yeah.
The one other thing that I think is critically important that hasn't really been said explicitly, although I think it is perfectly clearly implicit in the work that EARN is doing in terms of building a movement, is that this movement has to engage in critically important public policy activities at both the local as well as at the state level. Most of the work that we do has been focused at the state level, and I have been struck at how little real accountability there is for elected officials who are in Sacramento who don't seem to be representing the best interests of the certainly low and moderate income and minority communities that have sent them to Sacramento. And so I think that kind of degree of engagement in the nuts and bolts of politics and political accountability, whether that's at the local level and working your way up or at the state level, is really a critically important component of effective advocacy and building an effective movement in this arena.
I appreciate that, Paul. And actually, the suggestions that you all made dovetail nicely into a project that the Insight Center is recently or has recently launched. And so I wanted to invite my colleague, Alexandra Cestedes-Kent, to provide us with a little bit of an overview, because I think it will help to highlight some of the suggestions related to bringing income and asset building and preservation efforts together, specifically those that were mentioned in terms of workforce development and policies, sort of lifting up, sort of both an up from the grassroots and local level up to the state and even the national level, as well as just sort of the iterative process and what we can learn, when you're working across all these different levels. So, Alex?
Hi. Yes, I am glad to be on the call. I want to mention that the Insight Center is launching a project to unite the field. We're hoping to work with people across issues around the safety net, people who are boosting incomes or working to try to boost incomes, and also those working in asset building. We're hoping that we can form a network that will work towards greater alignment in the field and in the long term build public will for more inclusive practices and policies. So I've really enjoyed this conversation, and it sounds like I have some colleagues that I need to get to know more than just over the phone. So I look forward to that. I wanted to also invite listeners, if you're interested in the work that we're just getting started on, please feel free to email me and let me know about you and your interest. We're hoping to elevate some local and state best practices nationally, and we're going to make this a national network. So my contact information will be on the last slide of the presentation, and I look forward to hearing from you all.
Excellent. Thanks, Alex. So we've gotten to the end of at least, the formal conversation that we wanted to have around income and asset building and the important role of race, gender, and age in this conversation. We wanted to go ahead and let the folks who've been patiently listening and participating with us through the webinar to ask some questions. And there was one initial question that was a follow-up to Cheryl's presentation that I wanted to throw out there, which was whether the results of the listening sessions will be made publicly available for folks to access and how they could go about doing that.
Sure, they will. They are forthcoming, so we have a report that is coming out, and so that report will describe the listening session work as well as demographic data on who participated.
Excellent. Thanks, Cheryl. And just for folks who are out there, this is our time to allow you to have some discussion with our panelists as well as with us around any questions that have come up for you during the course of the webinar, any ideas that you wanted to learn a little bit more about that were thrown out in terms of successful synergies. So feel free, and at this point I think we actually may have the capacity to unmute you so that you can ask your question directly should you like. So all you need to do is, if in the question or in the chat box you want to let us know that you would like to ask a question, feel free to enter that in there. and we can certainly allow you to pose your question. And in the meantime, while we're waiting for questions to roll in, because I think we were able to address most of them that came up throughout the webinar, I just did want to emphasize that, again, we will be sharing the PowerPoint presentation after the session today, as well as providing you with some follow-up links and information to the various events and legislative proposals that were discussed. And we'd also ask, too, if you could please kindly fill out the evaluation that's going to pop up on your screen as you exit the webinar, because that's very helpful for all of us in getting feedback as we prepare for future events. So taking a look, does anybody have any questions? Right now, it looks like we already answered the listening session question. And yes, folks will get a copy of the PowerPoint. And feel free, folks, this is your time. And do any of our speakers, oh, it looks like maybe a question came in here. Let's see. What else? So there's a question for Paul. So the data he referenced, is that available on the Center for Responsible Lending's website?
Yes, responsiblelending.org. We have a rich array of data and research reports on both mortgage lending and payday lending. I would California-specific data reports. We have our own page that you can link on, click on from the very bottom of our responsiblelending.org homepage.
Excellent. And actually, why don't we, in that vein, we'll advance to the next slide, which includes all of the contact information for all the speakers today, as well, including the website. So, Paul, this was the responsiblelending.org/California site, right?
Oh, there it is.
Right. There it is. Okay,
exactly.
Good.
Right.
See, we had predictions that question was going to come up, so we put that on there. And Cheryl, you mentioned that once the listening session results are ready for public consumption, they'll be posted on the EARN website, which we have listed here as well.
Yes, it will be posted on the EARN website as well. I know there's probably a lot of folks who may be on our listserv. We'll send it out also on our listserv just to let people know that it's up.
Okay, excellent, great. And I just want to mention here, too, when you're looking at this contact information page, you have heard, at least from the Insight team, from myself, Anand, and Alex, and I did also want to acknowledge the director of our Building Economic Security for All initiative, Susie Smith, who is also available to answer any questions related to our work around income and asset building. So she's participating on the phone as well with us. So just wanted to acknowledge another member of our team. So are there any other questions? I think so far we've gone through all of them, and I wanted to give, let's see, I think one just popped in. All right. Looks like that was just a comment. So we don't have any questions right now. Did any of the three of you want to add anything else? Anything else pop into your head as you were thinking about opportunities?
That really, this is Sandra, that really right now is what is really the micro enterprise is moving right now in a big amount compared to that long time ago. People, they don't have a job, they having unemployment, they having a really low pay, so they're really micro enterprise. They're really for the small business is really with 5 or fewer employees is the key element that is moving right now in this kind of economic environment. And it's really with the majority is the owner, and also with initial capital is with 35,000 and even less in this time.
Great, thank you for that. And Paul and Cheryl, anything else, last words that you wanted to add?
No, just thank you for inviting us to be here, and thank you for providing this forum to disseminate this critical information and the conversation.
Sure, our pleasure.
Yeah, and this is Cheryl, just to thank you also, but also just to share, I think what we heard from this discussion. There's a lot of good work going on, and it may seem like, wow, there's a lot of moving parts, but I think at the end of the day, it's all really moving towards the same goal of how we can really help and benefit the communities that we all serve, which are low-income families, low-wage workers here in California.
That's right, and I appreciate that, Cheryl. And I do think that, while we focus this discussion specifically on communities within California as well as California as a state, there are some partners of ours who are listening in from other places, and we do hope that, we can learn from you as well as you learning from us, and do look forward to, continuing to building these partnerships with all of you going forward, and really do encourage folks to check out the resources that Women's Initiative, the Center for Responsible Lending, EARN, and Insight are able to provide, and I hope you continue staying plugged in. We will definitely send you all the materials from today's presentation following the session today, and it looks like at this point there are no other questions, and I think we get a gold star for ending early and giving you guys 10 more minutes of your day. So thank you again for joining us for Building and Preserving Income and Assets Within Diverse Communities in California. Take care, everybody.
Thank you.
Thank you.